Alright guys, today we're gonna talk about the price mostly because I have a couple of things which I would like to share with you from the technical analysis perspective, and I think they are very important and interesting. Of course we will talk about news a little bit, but in the end of this video. Okay, so what is the thing which I would like to mention today? Generally there are like three major points. First, if you're not familiar with this indicator, again, we were talking about the indicators, which are pretty much arbitrary things, and they don't work always. As you know, they're just exactly what they are, indicators. They're not predicting the future. But here is one indicator, which is called historical volatility percentile. Basically, what does it do? What does it show? Is it shows the number of, well, in percentage, the number of days in the previous year from now where we had the lower volatility than at the moment. And on the daily chart you can see here that, for example, there was a low volatility, very low volatility here, which means that very few days before we had higher volatility. And after we dropped, of course, volatility increased. So it means that such a huge volatility didn't happen in most of the days in the previous year. So like 80% of the days in the year was lower volatility than now. And now what we're seeing, that this trend of this indicator is decreasing. Basically, when this happens, and in general when volatility is low, we are about to drop or make a surge, have a surge in the price. So generally that was the period after which we had this strong price change, and we're approaching very similar moment. The point is, of course, we can't stay here for a very long time. This is not surprise. However, when we were there, it was much less stressed because the price was higher. Now we're much closer to all-time possible, well, like one year before possible low, and in the absolute values as well, like the most expected, like $1,000 or whatever low. So that is why being at this low from volatility standpoint is really unlikely for a very long period of time. So what we can see here is that we will continue to decline on this trend, and then when we reach previous, like similar or maybe a little bit higher value of the volatility, then we will finally see some change in the price. And you also can see this on different time frames, but one hour time frame is most representative in my opinion. So for example, 4 hours is less more bumpy, I would say. So we have like this change started even before the price drop before, and now at 4 hours you see how low we are actually. So we're about to be around this area and started to have this sort of pre-bump, pre-change volatility rise. So of course it's not telling that we are like make a move soon, but again, if we look at the price in many ways, for example, this indicator, sorry for a lot of the commercials. So from this indicator, also from the point of the volume itself, so we have a very nice trend of the volume here, and we can draw this line as well. Oops, something like, where is it, like this. Oops, sorry about that. I can't make this line drawn, but you got my point. So basically like something like this. And then if you zoom in a little bit, and you will see that we have that triangle of the wedge, which we looked before several times and mentioned several times. So we are basically intersecting this the same dates. Again, my line went somewhere. on the volume. So we're approaching the maybe February 7th, no, not 7th, sorry, 10th, 12th, when we have all those factors matched. So somewhere within 1 week from now on, I would expect, according to those factors, that we may see some change in the price. I wouldn't be surprised that it will happen. Moreover, another thing which is need to be considered, and I think we need to switch to Brave new coin in order to see this better, especially on monthly time frame, and if you probably better switch to logarithmic chart. So if we look at the historical data, then you would see that after the major like highs, we had this continuation of the bear market at least twice from now, if you will exclude the current one. And previously we had like long period of the declining trend, 1, 2, 3, 4, 5 months here. Here, for example, this was short. Here, this was not really, but still 1, 2, 3, 4, 5. Here it was the correction, quite of a correction. Then 1, 2, 3, 4. Okay, let's not be that picky and count it longer. Okay, 1, 2, 3, 4, 5, 6, 7. So those 7 months of the downtrend. Well, excluding this one, and you may like argue about that, but anyway, here I think this green was pretty strong. So let's count 1, 2, 3, 4, 5, 6, and this was actually this is actually a January candle. So what I want to say from that is, of course, it doesn't mean that history will repeat itself, and we may see like 10 or whatever number of months of the prolongated bear market. However, from like the conservative standpoint, we shall not see such a long downside pressure in principle, and we are sort of close to the longest bear period in the history of Bitcoin. So something like this should have happened right now already, if not happened already at this area, and this is just some kind of consolidation. So either we already, from this perspective, we either already had the bottom at 3,200, well, 3,150, or we will have just a major dip at this point. And in fact, if we look at the point when we had that dip in 2014, let's switch to just move it like that. So we will see that it was very, very sharp. Basically, few days, or maybe even 1 day, actually maybe a few hours, when we are talking about exactly the lowest point right here. So very, very sharp candle, and then we return back. So what it means that from the expectation of the price right now is that, yes, of course, we are pretty much headed towards the lowest low again, or at least test the previous low. But just consider that price action from the perspective of the huge players on the market. Generally, what you can see, what you can think of, is that, and basically everybody are saying that. For example, if you will look at the analysts, technical analysts who are, well, their analysis who are on internet, and not like bloggers like me, for example, right? But some professionals who came from stocks trading, options trading, etc., who have a long-term experience, and they're just sharing their view on the market, on Bitcoin market and the price action. What they are saying is that it's not like they say, okay, we have like this trend, we have this indicator, or we have this and that. That is why I would expect the bottom at 2,700. No, what they are saying is that sort of, if I would be a huge player, how I would try to make small players believe that the price will go this or that way. And yes, they basically are expecting the price go lower, but just because they are thinking that huge players want us to believe that will happen, and they're trying to find ways in the future of the price action which would make us to think that exactly this decline will happen, and will happen to certain levels. So from that standpoint, you would expect that you would think that it's reasonable that huge players, whales, manipulators, whatever you call them, they will try to push the price as low as they can until the point when they have still have the profitable trade. Basically, what you can see in the market usually is that when the trader or investor having huge capital, they don't look at the certain price as the bottom. For example, they don't try catching falling knives. Like they say, okay, this was the strong support, or this indicator tells me that the bottom will be 2,300. Now I'm talking not the whales, like big whales, but those who are those players that whales try to overplay. So anyway, like mid size traders and investors. So what they think still, like if you have $1 million or $10 million, what do you think is that you would not expect certain price to be the bottom, but you would look at the price action to define whether the certain area, whether the certain price is the bottom. For instance, if you see the price went to $2,100 and you see that there's a huge volume, like Gaussian volume distribution, and huge volatility at this area, a lot of the struggle, fight for the price, you would expect probably there will be a V-shaped reversal at this point. So we shall enter at least at some point to this at this level. And generally it means that they don't set the limit orders. Of course, we're talking about the spot market. They set market orders generally, and well, maybe limit orders, but where they are setting it just when they see some of the price action events. So what it implies is that when the very huge players try to move the price to the certain area, let's say dump it right now, they are looking at the reaction of the market. And at certain point, they don't have the huge resistance, huge reaction from the market, and that would mean that they actually can move the price even lower. But at certain area, not just speaking this one 2,500, but like some hypothetical area, they would have the situation when the rest of the market will, let's say, buy more at the moment they are trading, buy more than those whales which are dumping the price. It would mean that there is no reason from the profit wise to push the price even lower, because the selling pressure will be, buying pressure will be even higher at this point. And it means again that this would be the time for the reversal. So considering all that, how the next price action may happen, so that a lot of the mid-size investors, traders will not be able to enter the position. It's very easy. It should be very sharp, like it should be starting to decline like this, should declining, and then it should be sharp candle, maybe just a few hours candle or even 1 hour candle, where using this candle, using this sharp decline, huge players will see how the market reacts, and if they will see some buying action started to happened at certain area, they would see that no, we don't need to do that, we don't need to let other people buy, we will basically start to rise from that point. So at the optimum point of their profit, they will increase let the price going up, which basically means that if we'll go down, then it will be very short drop. Again, everything which I say is my personal opinion, it's just my view on things. Maybe you have another, so don't follow me on my trades, guys. And the last thing which I was going to mention about the price action is you can see that from this point when we had quite of the rally, the price sort of stopped, and it was quite of the price action at this level, something like 3,600 plus, and then we sort of had an euphoria pushing the price even higher. But apparently, if you look at this huge size corridor, price size corridor, you would see that basically you can think of that as a accumulation zone, but this was above that accumulation zone. So maybe if huge players in the market, they wanted to buy, so they managed to push the price very low, so they decided, okay, let's make a sideways price action to accumulate a lot. So what they do, they are pushed a little bit higher to make the other people believe that we actually still have a chance to go even. Well, it's quite twisted logic, but still they are using sort of contrarian signals, mixed signals, to make you believe either the price will go lower, so to make you panic, either the price will go higher to make you buy. But generally still they are buying, and they are trying to buy as much as they can. But when they see this one and already bought a lot of here, that they can actually suppress this rise to put the price lower, where they will continue to accumulate. So here there's not so it's not that profitable already to buy. Or moreover, if they will continue to buy, that will affect the price. So what they did, they suppressed it and put it back in order to induce some negative sentiment in the market, so people will not be that willing to buy. So they're expecting the further drop, what they are doing, in my opinion. So basically they're continuing to do that here. And moreover, you know that the OTC market is huge, so they are more likely to doing even bigger trades around here. But then when we sort of stagnated, and some people are trying to they started to consider the rise in the price, the supply of the sellers at this area decreased for the huge whales on OTC market, then they pushed the price on the spot even lower to increase the supply of the sellers again, what they did basically. So as soon as they're trying to sell us some signals of the price will go lower, the more and more sellers will appear, and just the question where the overall sentiment, the overall especially on the spot market, will change, so that will be not profitable for whales anymore to dump the price. That is my opinion what is happening. Again, basically very soon we probably see some development of the price which will be quite understandable in terms of the which will be quite reasonable, and we will see something definitive. And moreover, even now, even a short-term time scale, you can see that there was quite of the low, and we have a higher low. We have now high at maybe 3,470, and now we're approaching to test this high again. So if we'll make a higher high and actually break this wedge resistance, then it may be a signal to even bigger rise. So even maybe now already we are in the sort of pre-rising area, very likely, especially that altcoins dumped so hard, so they need to correct it upwards. Very likely that will go up, so I'm still more bullish than bearish. And the last but not least thing which I need to mention is that the general point which everybody are expecting and looking at the market right now is that, okay, where will be the bottom, where we shall buy. The main mistake for that about that is this sort of view on the price and the market is that you want to spot the exact bottom or the lowest point as you can in order to enter like 100% the whole your portfolio in, because from that point you would be the less risk to see the growth in future, well, not see the growth, less risk, and the growth will be most likely. But this is from the beginning, it's the very like corrupted idea, because you shall not enter the market with the whole of your fund. You need to have a plan B. You need to have a like separate fund to be able to buy in eventually, or you need to fix some profits and so on and so forth. Generally, what you can do is that you can buy at every time which you expect it to be the bottom, but not wait for the ultimate one. And from that, saying that, you need to understand that if you're not buying this at this area, but at all, I mean, you are risking and waiting for the new low. You are risking that price will not go to that low, and you will be out of the position. Of course, and $5,000 and $6,000 still not bad if the price will go there, but it's much more reasonable from the long-term perspective to have some long position at this area and just have another long position even lower if the price will go low. Just a little bit of a long position and higher bigger long position if the price will go low. This is much more efficient from the statistical point of view, from my opinion. And the news, some news. So we're continuing to have some positive things about Fidelity. You know, it should be launched, as the rumors said, in March, and they have even more updates on their preparation, so that basically they have final testing stages. And I would say that such a company, such organization will not risk their reputation by providing any kind of signals that they are about to doing this or that, and then eventually they will like give up or something. So I would expect this indeed really happened, maybe even in March as stated. The second thing is about NEO, which had a lot of the pessimism, a lot of the FUD even recently about NEO is over and the developers are gone and so on and so forth. But you know, the sentiment in crypto area, in crypto space, changes very fast, just in a blink of an eye, like this. What may happen is that it may appear that development during a certain period of time before was so immense that now we have the basis for the future rise, and the price will surge and people will be so optimistic again. So in February 16th, 17th of February, there will be a devcon of NEO, and there will be some insights of NEO 3.0, which is a huge development, and a lot of things should be made, at least expected to be made, in the perspective of development of NEO platform itself. So we'll see, but basically what I'm implying for saying all this to news, and remember there is also backed and another things, smaller ones, that in February and in March, so like 1, maybe 2 months from now, and also remember in the end of the end of February, there will be Ethereum hard fork. So a lot of the events are happening very soon, and basically we are in this sort of point of change. Maybe even we will not see this price anymore if those events will be positive, if people will start to gain again some optimism and so on. Okay, hopefully I hope that it was useful and you learned something, and I bring you some kind of cheerment. You are more cheerful right now because of the fact that things are not that bad in reality, and you have a lot of the signals that we have a hope of going higher than a lot of people expect, instead of a lot of people expect going low. Okay, anyway, thank you for watching. Hope to see you tomorrow in the next update, and see you guys. Safe trading.